Welcome to the deep dive. Today, we're plunging headfirst into the incredibly fast-moving world of cryptocurrency. Our mission really is to cut through all the noise, the endless tweets, the jargon, and just get straight to the core insights from a stack of very, very recent sources.
Exactly. And, well, the goal today is to give you a really comprehensive snapshot. We're looking at the latest significant shifts, major investments, even some pretty bold predictions shaping the crypto market right now. We pulled together articles all published just yesterday, June 18th, 2025, covering, everything from big funding news to surprising price forecasts and those crucial regulatory developments.
Yeah, and as we unpack this, you might find some truly surprising insights. We're talking big money backing, brand new ventures, analyst predictions that, well, they defy expectations sometimes. Also, that global race for regulatory clarity, which is always fascinating, and even what smart money is reportedly doing with specific altcoins right now. Let's get into it. Okay, so starting with some fresh investment news, we saw BitVault has just secured $2 million in seed funding, and notably, it has the support of Gemini. Now, when a name like Gemini, with their reputation and focus on compliance, when they back a seed stage venture, it's not just continued interest, is it? It often signals a belief in that project's long-term fit within the regulated crypto landscape. What does that sort of signal tell us about where the serious capital is looking right now?
Well, I think a key observation here is just how quickly new projects are attracting capital, even in this dynamic market. The seed funding, yeah. But couple that with the fact that US Spot Bitcoin ETFs, they're seeing remarkable inflows, like $217 million recently. That signals strong ongoing demand from institutional and retail investors alike. So it's not just small players anymore. Major capital is actively moving in, which indicates, a broadening appetite for exposure to digital assets.
That $217 million inflow, yeah, that's certainly a huge number. But speaking of numbers that make you pause, one analyst, Brad Mills, is forecasting Bitcoin could soar to $3 million per coin. I mean, that's a potential hundredfold increase. As someone who digs into these numbers, how do you even begin to sort of contextualize such a bold claim? What underlying assumptions do you think are driving that kind of, well, extreme long-term bullishness?
It certainly is bold, no question. And look, we always need to take predictions like that with a critical eye, right? But it's worth trying to dissect why some analysts arrive at these figures. It really speaks to a deep conviction in Bitcoin's long-term value proposition, often tied to its scarcity, its role as, digital gold, and the belief that it could eventually compete with traditional asset classes for global capital. But I'm curious, does a number like $3 million resonate at all with the broader market trends you've been seeing? Or does it feel purely speculative to you?
It definitely pushes the boundaries, I think, of what many might expect, but it undeniably captures that really ambitious long-term view some people hold. Okay, shifting gears a bit, let's talk regulation, always a hot topic in crypto. Franklin Templeton has issued a warning. They're suggesting that Europe, which was once seen as maybe a pioneer in crypto regulation, might actually be falling behind now in the global race. They even warn Europe could become just a corridor for innovation rather than actually retaining it.
Yeah, and if we connect this to the bigger picture, it really highlights this critical race between regions for leadership in the digital asset space. So while the EU established some early frameworks like MiCA, the United States and Asia are now rapidly advancing their own regulatory approaches, often with different philosophies too. Franklin Templeton's concern, it raises a really important question. Will the EU's initial lead be eroded? And could that potentially impact where crypto innovation and investment choose to settle? Because this regulatory clarity, or the lack of it, directly influences where capital and talent flows on a global scale. It's crucial.
And on the U.S. side of that regulatory conversation, Coinbase is making a very direct push. They're actively seeking approval from the SEC, the U.S. Securities and Exchange Commission, to list tokenized stocks on the blockchain. So for those maybe new to the concept, this basically means traditional company shares could be represented as digital tokens, which could potentially offer benefits like fractional ownership, maybe 24/7 trading, greater transparency, that sort of thing. This truly feels like a major step towards merging traditional finance, or TradFi, with blockchain tech, doesn't it?
Oh, absolutely. This move by Coinbase is significant, really significant, because it directly addresses that intersection of decentralized technology and, well, established financial markets. Tokenized stocks could potentially revolutionize how assets are traded, offering, like you said, greater transparency, fractionalization, maybe more efficiency. It's a clear strategic play to bridge those two worlds. And the SEC's decision here, that's going to be a bellwether. It'll indicate how quickly traditional financial assets might move onto blockchain rails, the underlying infrastructure that makes all this digital transaction stuff work.
Okay, let's talk about what smart money is reportedly doing right now. This is always interesting. Our sources are highlighting three specific cryptos that top wallets are accumulating, positioning themselves, it seems, for the next altcoin season. You know, that period when smaller coins often see big gains. Those are CRO, PI, and PEPE. So CRO seems to be gaining momentum due to its rising utility across trading, payments, and crypto.com services. PI is apparently eyeing a rebound as 68 million tokens are set to unlock, which could boost network activity. And PEPE, yeah, the meme coin, is showing surprising bullish strength despite recent market moves.
Right. And what's fascinating here is the selective nature of these accumulations. It's not just buying everything. Even amidst all the market volatility, certain assets are being actively bought by those who often have, let's say, deeper insights or conviction. For PI specifically, that token unlock, normally you'd think that's a dilution risk, right? More supply. But it's being met with accumulation, which suggests smart money sees it maybe as a liquidity event, something that could fuel new partnerships or project development, rather than just a sell-off trigger. That's a subtle but I think important distinction. And PPE, well, as a meme coin, defying expectations by showing bullish strength, that indicates a sustained speculative interest, probably tied more to its community and viral potential than traditional fundamentals.
Yeah, that PE one is always a bit of a wild card. And maybe the most surprising detail in this smart money section is about KASPA, or KAS. Despite its price seeing a massive 65% crash from its high back in August 2024, top wallets are reportedly still buying KAS. It seems there's a strong belief in its underlying value, even during such a significant downturn.
Yeah, and this raises a really interesting point about investor psychology and long-term conviction, doesn't it? I mean, a 65% decline is substantial. For many, that's a clear get-out-now signal. But for these top wallets, sustained accumulation often indicates a strong belief in the project's fundamentals, maybe in its tech, its roadmap, or just a calculated bet on future recovery. It really challenges that immediate sort of gut reaction to a price drop. It underscores the idea that not all smart money reacts uniformly to price action. They're often looking beyond the short-term fluctuations for potentially deeper value.
Wow. Okay, what a lot to unpack in this deep dive today. We've really seen just how dynamic the crypto space is, even just looking at a single day's news cycle, from significant inflows and, new funding like BitVault's $2 million with Gemini's backing, to that really ambitious Bitcoin price forecast of $3 million. It's clear there's no shortage of big swings and bold predictions.
Absolutely. And we also touched upon that ongoing global regulatory race, highlighted by Franklin Templeton's concerns about the EU maybe lagging behind the US and Asia. And then there's the strategic push by companies like Coinbase, trying to merge traditional finance with blockchain through tokenized stocks.
Yeah.
These aren't just isolated events, are they? They're all pieces of a much larger, evolving puzzle, constantly interacting.
Right. So to synthesize the so what for you, the listener, consider this. You've got the overall market demand shown by those huge $217 million inflows into US Spot Bitcoin ETFs. Combine that with the selective accumulation of certain cryptos like CRO, PI with its big token unlock coming, and even PEPE by smart money. And this is happening even amidst crashes like KASPA's 65% decline. It really underscores a market is just in constant flux.
Driven by both pure speculation on one hand and real foundational innovation on the other. This strategic maneuvering by major players in the regulatory landscape, alongside significant capital movements and these daring price predictions, it paints a picture of a market that's, well, it's maturing in some ways, definitely, yet still wildly unpredictable in others.
It truly shows that for every bold prediction, there's a strategic investment somewhere. And for every market dip, there seems to be some calculated accumulation happening.
Yeah, it's a landscape defined by both incredibly rapid change and, at the same time, an underlying long-term vision for some players.
So considering this blend, bold predictions, substantial investments, and that critical global race for regulatory clarity, what does this all mean for the future intersection of traditional finance and decentralized technology? How might these pieces of information, influence your own understanding of digital assets moving forward? Something to chew on until next time.